Bienvenidos de nuevo a Casa SEAT, el canal Economic Zones. Bueno, hemos escuchado a José Alonso hablar, imaginar las ciudades del futuro, pero ¿qué hay del futuro de las inversiones? ¿Cómo afectarán las nuevas medidas económicas al futuro de la inversión extranjera directa? Bueno, pues BNU reúne a profesionales del sector para dar luz a nuestras preguntas y a darnos herramientas para afrontar el futuro. Nos acompañan digitalmente Andreas Dressler, Salvatore Di Giovanni y Pedro Beirute. Y para moderar este debate tenemos otra vez a Courtney Finger, jefa de redacción de New Statesman Media Group. Welcome back again.
Thank you.
And go on.
Thank you
All
very
yours.
much for the introduction, and thank you for those of you who are tuning in. And most of all, thank you for the opportunity to lead this session. Of course, FDI is a topic that's central to almost everything when we talk about economic zones. The zones simply can't really function without at least some degree of foreign investment. But it's extremely tough times right now in the world of FDI. Any of you who are working in the industry or even tangentially related will know that it's one of the biggest crises that we've faced in FDI in terms of the sudden drop in inflows, the expectation of somewhere around a 40% decline over the course of the next year. Supply chains being rejigged all around the world, massive changes, companies halting plans and taking a much more cautious approach to those overseas expansions that they will still undertake. So we'll try to talk a little bit about what that means for economic zones. Where does that leave the zones who are reliant on the attraction of foreign direct investment, and how economic models are changing, and then therefore perhaps how can investment promotion agencies, national agencies, as well as regional, city, and related economic zones cope with the changes and find a path forward. So we've brought together a trio of really fantastic panelists who can take a few different angles on all of this. Andreas is a managing director for FDI Consulting Services, which trades as FDI Center, a well-known expert in the field of FDI. Pedro Beirute is CEO of Procomar. This is the Costa Rica Trade Promotion Authority. He's also the president of Essential Costa Rica, the national branding agency. So he'll be able to talk about what this means for trade as well as for FDI. And Salvatore Di Giovanni is the head of the investment promotion team at BINVEST Chile. Welcome, gentlemen. I think I'll pick on Andreas first, and you can perhaps give us a bit of the lay of the land. I mean, we know things are challenging. We know things are not great in terms of global investment flows, but how does it stand right now? How optimistic are you? And what prospects do you see for the near to long term?
Yeah, Courtney, you already mentioned the word tough. These are tough times for everybody involved in FDI. And you also mentioned that 40% figure that gets thrown around all the time. That's from an UNCTAD projection from earlier this year that FDI is going to be declining by 30 to 40% this year. The statistics are kind of spotty. The numbers that I've seen based on greenfield projects do show a significant decline. We'll have to wait till next year to see in numerical terms what that really means. But right now, anecdotally speaking to investment promotion agencies, and we have representatives of two of them on this call as well on this panel, pipelines are looking pretty slim. There are far less projects than in previous years. Companies have put investments on hold. Some companies have canceled investments altogether. So investment is going down. On top of that, there's another risk. Not just is there less investment, but companies are also under a lot of pressure, certainly companies in some industries that have been impacted most. So on top of the decline in FDI, you have governments and investment promotion agencies that are now facing risks of downsizing, or even companies closing facilities altogether, or perhaps moving facilities to another part of the world. So that's the negative side. There is a positive side. So even if FDI goes down by 40% this year, which is the worst case scenario, there is still investment out there. There's still the other 60%. And certainly in our work, working both with companies on their investment decisions and with governments and investment promotion agencies, we're still seeing a lot of activity. We're seeing real projects, companies that are moving ahead, initiating new projects, making location decisions, and starting investments in a range of different sectors. So it's not all doom and gloom. It's certainly going to be a tough year, certainly one of the toughest that I've ever witnessed since I've been in this field. But it's not really as bleak as is often portrayed. Projects are out there and companies are still making investments.
And in terms of where the bright sparks are right now, whether that's sector or geography, where are these glimmers of hope?
So there's really two broad areas where we're seeing activity. One is companies in sectors that are actually benefiting from the pandemic or some of the effects of the pandemic. So those are companies in areas such as automation, whether that's automation for manufacturing plants or distribution centers, automation really across the board in all industries, robotics. It's companies in sectors such as logistics, primarily land-based logistics, last mile logistical solutions. It's companies that are developing digital technology for remote learning, technology for remote medical diagnostics, for example. It's companies that are in fields that have also benefited from demand for food. So food production is another area that has experienced an uptick. So those are, I would say, short-term effects. The other category of opportunities are trends that have been going on for quite some time. So these are trends that have been going on for several years and that are continuing, in some cases even producing more projects than before. So one of those is sustainability. So that's everything from renewable energy to investments in recycling, things such as recycling plastic into fuels, which are generating projects around the world. The trend of digitalization has obviously been impacted positively. This has been happening for years, because as we're all at home doing things remotely, there's been massive demand for digital solutions and also demand for storage space and processing space. So the data center industry doing very, very well. In the food sector, in addition to traditional food processing, we're seeing even more investment go into food solutions that are based on producing food locally. These are things like vertical farming, or even novel types of foods such as plant-based meat substitutes that are also experiencing increased investment. Mobility continues to receive investment and produce investment projects, less so traditional mobility, but certainly things related to autonomous vehicles, electrification of mobility. And then finally, life sciences, which is almost impervious to some ways to the downturn. Companies in the pharmaceutical industry or biotechnology have long-term planning horizons. They spend billions on R&D. They need to get products out to market no matter what is happening in the economy. And then companies in certain segments of the medical device industry, again, experiencing an upturn related to COVID in some instances.
Thank you, and it is certainly good to be aware that the downturn is not across the board. And I suppose the successful investment promotion agencies might be those that are able to tap into the sectors that are still performing well while supporting their investors in sectors that are struggling and perhaps try to retain some projects. So I'd like to check in with Salvatore. Now you're kind of on the FDI front lines running an investment promotion team at such an exceptionally challenging time. How has your agency reacted, and are you encouraged by any of what you hear from Andreas? Oh, I think we can't hear you. Oh, we're struggling to hear you.
No, it's because I had to turn off the microphone. Sorry. In terms of an agency, we are facing tough times, and I completely agree with Andreas. Something happened here in Chile. I don't know if you are aware, but we faced two crises in Chile. So the social outbreak on October 2019, and the COVID pandemics this year. So we face two disruptive events in Chile and challenging times for FDI. In terms of what we are doing, first, digitalization. Of course, we born digitally on 2015, and we just leverage on our capacity to provide information and be in relation with our investors digitally. Of course, we promote a lot of information regarding operational continuity for the companies that were struggling. So the the protection law for workers, teleworking law that was pushed during these times, access to finance. So the government has a very strong commitment to provide liquidity into the market through finance, and we have been doing this all digitally. Regarding what Andreas put regarding the opportunities that we are seeing, actually, we completely agree with you, Andreas. We have been seeing a lot of movement in the data center market here in Chile. Chile has been positioning itself as a data center hub for the southern corner of Latam. We have been hearing announcements from Ascenti, Odata, and some cloud providers that are under performing projects here in Chile to attend the region, not only Chile. So that has been the approach of the agency, has been digitally and trying to be massive with the customers that we already have in Chile to keep operational continuity. Funny thing is that we are facing an increase in the FDI inflow into the country. So we have a 14% more FDI than last year, and last year was an increase with the previous year. So we are changing the numbers here in Chile, and funny thing, because we know the statistics and the trends that are under the public knowledge for FDI inflow into the world, but we are reaching 10 billion this year. Of course, we still have to see how the final statistics for the year are going to be, but for now we are very, very enthusiastic about the numbers that we have. That could be because companies are providing cash to keep operations going, or for new projects. Actually, 50% of that increase has been on equity, but both cases are good news for Chile. Both cases translate into a long-term commitment with the country, and so we are very enthusiastic, even in these tough times.
Well, it's good that your 40% has a plus sign in front of it instead of the big scary minus 40% that we're used to talking about. Do you find that you're needing to put a bigger focus on aftercare and investor support to help retain those projects that you already have?
Absolutely. All the major efforts during the beginning of the pandemic were focused on aftercare companies. And we try to reach more companies because we are a new agency, and not all the foreign companies established in Chile know what we can do for them. So the first thing was to put together all the multipliers and allies that we have into the country to reach more companies into the national base. And of course, aftercare efforts are the main efforts that we are doing today to keep companies going with their operations, and also because they translate in more investment. So it's easier to us to promote reinvestment for companies that already solve the asymmetry of information. And in Chile, compared with the OECD countries, we still have lower reinvestment percentage. So we think we still have opportunities to have an impact on that.
Thank you. And Pedro, tell us how things are going in Costa Rica. This is obviously a small country, but that's always had a quite outsized performance for FDI, quite a success story over the past couple decades. What is your strategy for recovery, and how are things there right now?
Thank you, Courtney, and good evening, everybody. So in a nutshell, not as bad as Andreas said, but not as good as Salvatore said for Costa Rica, right? As you said, we're a small country. It's a 5 million people country in a 600 million people region, which is Latin America. And as the rest of our region, we are probably 2 or 3 months behind Europe in terms of the pandemic. So we're still into a peak of cases. There's a lot of tension between the sanitary measures and the economic measures that creates, of course, not just sorrow, but uncertainty about the future. FDI is down, similar to Andreas' numbers, close to minus 40%. trade is not as bad. It's minus 1%, which demonstrate also the fact that our strategy of being very well diversified in terms of our products of export has worked well, because in terms of trade, the world is down by 17%, I think. Latin America is down by 22, 23%. Costa Rica is down by only 1%, which, of course, entering into the second half, we expect this to be better. Looking forward, I've no doubt that the globalization will continue. Therefore, this is an opportunity for us in the agency, both FDI and Trade Promotion Agency, to demonstrate our flexibility and our agility. World is actually changing faster than we are as agencies, as governments, but this is a good opportunity to also leap ahead in terms of specialization and differentiation, which is the case for Costa Rica, a small country, 5 million people. So how can we become leaders on anything? Well, our bet is on conscious business. It's on business with purpose. Is on triple P, people, profit, planet approach. And we're working on that. Our foundations are very, very solid. We are the oldest democracy in Latin America. We are a very peaceful country. We are number one, number two in terms of education, in innovation. We are the most sustainable country, not just in Latin America, but almost in the world. We are a happy place. We rank number one in the Happy Nation Index. And of course, we have developed this policy of openness in which we have free trade agreements with more than 50 countries, similar to Chile. So those are our foundations. From there, we need to keep building trust, demonstrating that we can manage business continuity, and as a country aligned to the SDG goals. Our priority is that both FDI and trade has to work for everyone, not just for few. Therefore, more than dollars of investment, we're also very conscious about jobs creation. Number one challenge that governments have these days is jobs destruction because of the pandemic and because of automation and many other things. So how can we move faster and smart to develop talent and intercept all these winner industry that Andreas was mentioning, right? So in terms of job creation, it's where we have all our priorities, right? How we balance the old economy versus the new economy, the digital economy with the physical economy, and how we evolve from being just matchmakers or being just FDI agencies or exports growth agency into more enablers of inclusive growth, of economic development for our countries. So that means acting not just as soloists, but really acting as an orchestra and moving from matchmakers to trust builders in our countries. That's our mission these days. But again, with an optimistic view of the world, because we know this crisis is temporary, and things will be better if not by end of this year, next year, or the following year.
Thank you very much. And for sure, the industry of investment promotion, which was already changing, we often talk about investment promotion or FDI 4.0, and that digitalization is a key part of that, for example, and the focus on sustainability. And it seems the crisis has only accentuated the importance of that and even accelerated some of these trends. I would like to ask Andreas, when you look around, there were kind of the reactions that investment promoters had in terms of what they could do immediately, how they could help investors, what kind of information they could provide. But then there are also policy decisions that were made, new policies brought in, reactions that governments had at the policy level to try to deal with the crisis. If you survey the world, do you think that effective tools were put into place to help safeguard and give a boost to FDI?
Well, we've certainly seen a huge variety, a huge spectrum of different policies that have been put into place. I'll just run through a few of them and give you my personal view of what I think. Again, time will tell whether these were the right policies to put in place. I think one of the first reactions we saw earlier this year in many countries, particularly OECD countries, were new FDI screening procedures. Some countries have had these in place before and tightened them. Other countries, for example, in the European Union that didn't have them, put them in place. The argument there being we need to protect our own businesses from predatory acquisitions. In other words, companies from certain parts of the world coming in and buying our distressed businesses. I understand that rationale, but it's probably not the right time to be putting in policies that actually hinder FDI rather than letting it flow. So again, time will tell if those were the right policies. We've seen a lot of stimulus programs, huge amounts of stimulus programs, more than ever, certainly more than the last two big crises, the dot-com crisis or the global financial crisis. The amount of money that has been spent by countries to reinvigorate the economy is staggering. And we're talking tens of trillions of dollars. That's good, and that can be beneficial for FDI. If it's directed to the right channels. So for example, Germany, where I'm based, is spending huge amounts of money. I think it's the world's biggest stimulus program designed to bring Germany forward technologically, to stimulate certain types of industries, new technologies. That's beneficial, but what I think is missing a little bit, not just in Germany, but in other parts of the world, are then the regulations that go with that. So for example, if you're trying to stimulate the autonomous vehicle industry, do you actually have rules in place that allow you to test autonomous vehicles on the road? If you're trying to stimulate unmanned aerial vehicles, do you have rules in place that allow you to test and deploy drones freely? If you're trying to stimulate the digital health industry, do you have rules and regulations in place that allow you to store and transfer patient data? So it's not just a matter of pumping money into the economy and hoping something will stick. It's a matter of putting money into the economy smartly and then putting in place the enabling regulations that allow that money to then stimulate and really generate investment projects. What we've also seen are, I guess, a return to protectionist, dirigist type of industrial policy type programs. So this is where governments are forcefully trying to get companies to either relocate from one place to another or really move their production facilities around the world. So you've got the example of Japan that is actually subsidizing Japanese companies not to return to Japan, but to move from China specifically to Southeast Asia and South Asia with the aim of diversifying and de-risking the supply chain. You have the US government in particular that is talked about, ripping supply chains out of China. You have certain governments in Europe who are, using terminology we haven't heard since the 1950s, where they're talking about, companies having to move facilities back to their home country in return for government support. Depends on where you stand on these programs. My personal view is that you may generate some quick wins, but anything that tries to distort the global economy to that effect and tries to, forcefully against market realities, compel companies to move things from one place to another is not going to have a long-lasting benefit. Again, time will tell if I'm wrong or if those policies are the right ones to put in place. And then finally, we're also seeing, I think, some really smart incentive programs. So these are not policies, but these are specific programs that governments are putting into place. Just one example I'll mention, the state of Virginia in the US has reintroduced a program that they previously stopped, where they're actually supporting companies for teleworking positions. In other words, rather than incentivizing companies who create, according to the old model, a new facility with all jobs in one place, they're cognizant of the fact that companies now have a more dispersed workforce, and they've adapted their incentive programs to take that into consideration. So those types of very specific incentive programs, I think, can have an effect as well.
Thank you. And I would like to ask Salvatore and Pedro to feel free to react or add to anything that you've just said, but a specific question that I also have for both of you is, in this great rejigging of global supply chains, which we're seeing, especially as relates to China, how do you feel that your respective countries can secure, your place within the global value chain? And does all this kind of supply chain shifts benefit a Chile or a Costa Rica? Maybe Salvatore, if you would answer first.
Thank you. Great question. Actually, it's a challenge that we had in Chile for a long period because we don't keep the industrial policies in the past, and then we lost some of the very heavy industrial assets that we had up to the 80s in Chile. So we need to differentiate supply chain from value chain. So from the value chain perspective, Chile has been positioning itself like Costa Rica and say, well, in the global service industry, so trying to keep and trying to move some business processes and KPO processes into the country and to get inserted in the value chain of different industries. So actually in Chile, for example, we have software developer. So the software developers like centers like Synopsys or Mentor Graphics that developed the AutoCAD for integrated circuits in Chile, but we don't have any factory of integrated circuits in Chile. So that's one of the things that we are trying to keep pushing, and this global services industries has been a very relevant industry for us in the last 10 years, and we keep pushing that. In the size of the supply chain, so like physical and service, let's keep services outside, so more physical, we do have some challenge. Actually, Chile is far away from the majority of big markets, let's say. So when you think and you move through when the driver is market size, Chile play a role that is difficult to put in value. So what we try to show here and why we think that we have opportunities here is because Chile is very integrated in a free trade agreement network that is probably the more broader one into the world. We reach 86% of global GDP. We have more than 30 free trade agreements with 67 economies. So we do have opportunities here to add value into the country and export that integration to other countries with of course, tariff benefits. But it's not only that. It's also the trust that the country has constructed in the long run. So we do have we are stable in terms of policies, and in foreign investment policies. Actually, we don't have a screening mechanism. Of course, we are a not developed country. We want to become a developed country. That's why we also don't have this kind of screening, at least yet. And that integration with the world in terms of trade and what the free trade agreements can provide from Chile as an advantage, and the fact that Chile has constructed this confidence for other countries in the long run represents a great opportunity here to integrate in the industries that we do have a competitive advantage, like the production of green hydrogen, food industry, and of course the service industry. So those are some examples of what we are pushing, and we are reaching new investment in these areas as well. We haven't stopped. Beside the fact that we have been focusing on aftercare, we're still promoting opportunities for new investors, and the new opportunities for those investors are already established into the country.
Thank you very much. And Pedro, how do you see the impact of trade wars and supply chain changes on Costa Rica, and how can other small countries safeguard their place in the global value chains?
Yes, I think these days we all have to wear bifocal lenses. The short-term lenses for addressing the emergency, for really getting to the tension that is living the world these days, and adapting with flexibility, with agility, showing resilience, and adapting fast to the global demands. But also the long-term view of these bifocal lenses, right? What's our vision? And there is where each country has to have a strategy. Just like Chile, we're a mid-income economy, and we are aiming not just to become a higher income economy, but really a higher quality of life economy, right? Which is our goal, is to reduce the gap, the divide between the rich and the poor, and reduce poverty, of course, and promote social progress. And in order to do that, each country has to develop its own strategy based on the market conditions. Of course, I think we can take advantage of the rivalry between the Western and the Eastern. We are a nearshore alternative to the US for operations that they may have in China. We can also take advantage of this sustainability trend. And this is nothing that we just adapted because it's fashion. It's something that we started probably 50 years ago, protecting our resources, protecting our forest. Open air mining is illegal in Costa Rica. Oil exploration is illegal in Costa Rica. We plant more trees than we harvest. 100% of our electricity comes from renewable sources, meaning that this air conditioning, the factory next door, they all run on green energy. And these are the type of positioning we're trying to have, right? To attract companies that are not really looking for the lower costs, but perhaps that are looking for the cleanest energy matrix, right? And they don't bother to pay 10 or 15% more on electricity, as long as they know they are not damaging the planet, and they are just using green renewable energy, because that's the future, right? From linear to circular, and these kind of things. Of course, talent development is a priority for us, because the world is moving towards services. The world is moving to Industry 4.0, just as Andreas and Salvatore have mentioned, and we're working on that. We're working also to improve our country competitiveness through local suppliers development. We think that FDI, it's truly an opportunity for us to develop our local SMBs. We're working in the ease of doing business. We have joined OECD recently as well, and for us that is a major milestone to join Chile, Mexico, and Colombia in Latin America as part of the OECD. We're working a clusters strategy. We're working on private-public partnerships, and basically being aware of our strengths and limitations as a small country, as a boutique country, to position different, to specialize, and to offer value to those potential investors to come here in Costa Rica and enjoy a country that has no army, a country that, just like Chile, has free trade agreements with more than 50 countries, a country that is 2 hours away from the US, etc.
Thank you very much. And Andreas, I would like to return to the topic of the investment screenings, and of course, the other gentleman can weigh in on this as well. I mean, we have seen, as you mentioned, an increase in protectionism. This was happening before COVID struck, and more investment screening mechanisms being put in place, especially in Europe, which is a key destination and source of FDI. To what extent does this concern you, and could that hinder any more generalized FDI recovery?
Well, if you read some of these new policies, they're actually pretty fair. So they are designed to protect investment in certain sensitive industries, and depending on the government, those industries are well defined. They don't specifically say who they're designed to protect those industries from, but I think we all know who those policies were designed for in the first place. It's not just China, by the way. It's also, in Europe's case, the fear of US big tech firms coming in and making lots of acquisitions, because there are lots of companies that are available and have low valuations. So the policies themselves, I think, are relatively justified. What perhaps is more of a detriment to investment is just the perception that countries are closing their borders, the perception that countries are putting up barriers to FDI, the perception that countries are making it more onerous for companies to invest. So it's really a matter of addressing the perceptions and saying, look, we do have these programs, we have them for a specific reason, but that shouldn't stop anyone from investing. And it's also a matter of making sure that there is the administrative process that enables those screening processes to happen very quickly. So, for example, Australia, that has a screening mechanism, has had one for a long time. FIRB, Foreign Investment Review Board, when they first put that into place, a lot of Chinese companies in particular reacted very defensively and said this is going to make it hard for us to invest. But experience then showed that the FIRB review process was actually very easy to go through, not onerous at all, and that only a really minute portion of investments were actually then not allowed. So I think it's a matter of bridging this disparity between the perception and the real reasons why these screening programs were put into place.
Thank you. And in Latin America, we have seen less of this kind of activity recently in terms of newer screening mechanisms being put into place, but there are always other roadblocks and hurdles. So, Salvatore, what do you see as the biggest challenge that you will face in the next months in trying to maintain positive FDI flows?
So that's a good question. So you may be aware or not, but in Chile we have a constitutional process going on. So there is a process where the Chileans will decide whether to go ahead with a new constitution for the country and the way that it's going to be. And of course, that produced some uncertainty on foreign investors. So the big challenge here is to provide the information and solve the asymmetries of information that, because we, as a country, have a lot of free trade agreements and agreements of investment protection that provides the escape where this new constitution should be constructed and what needs to be respected regarding those treaties. And in that sense, I think the big challenge that we are going to have is not the pandemics, is the new constitution that is going to, this process, constitutional process that we are going to have. We don't know if the Chileans will decide whether to go or not, but it's highly likely that it's going to be a yes. And therefore, the main challenge, at least for the agency, is to provide all the information, official information, to diminish these uncertainties.
Yes, and I think it's important to, I guess, remember that COVID kind of dominates everything right now as the big disruptor and uncertainty, but there are other political uncertainties, civil unrest happening in many parts of the world that we also have to contend with. Disruptions such as Brexit impacting the UK and Europe in the midst of all of this. So no shortage of things to tackle. Pedro, what do you see as the biggest blockers to maybe coming out of the COVID crisis, where you'd like to be?
Yeah, for us in Costa Rica, the main challenge is talent development. There's still a big gap between in society, right? So we still need to work more on increasing the levels of bilingualism, trilingualism, develop STEM, where the jobs are being created, and that's our main challenge, right? How can we move faster? How can we make sure that FDI works for everyone, and really this becomes a tool to improve social progress, not just economic progress. So we're working at the legislative level, at the Ministry of Education level, to go faster in terms of talent development. And this is being said from a country that already has a very high investment in education. 8% of our GDP is invested in education. So that has been the recipe that we have had to attract a lot of these multinational companies to Costa Rica. But unfortunately, it's not enough, right? We have companies that are asking us for hundreds, if not thousands, of new experts in cybersecurity, and we don't have that, right? So it takes time to build those capabilities in STEM. So for us, that is a priority, and even for the old economy like agriculture, which still Costa Rica is it's a relevant player with pineapple, coffee, bananas. We need to ensure we bring technology to these sectors so that we maintain the diversification that we have enjoyed for the last few years. We export more than 4,000 different products, and none of our products represents more than 7% of our total exports. So that means that when the coffee prices are down, that is compensated with breast implants or with eye contact lenses or with bananas or with superfoods or things like that, right? Diversification for us, it's very important because it reduces the tensions that the international market conditions can have. And in order for us to have diversification, we need to have talent in different fields. And that's the main challenge we have these days. How can we make sure that 100% of our population speaks English, not just 20% or 30%, which again is higher than the Latin American average, but it's not enough given what the IBMs, Microsoft, Intels are asking us. So we're working on that.
And I suppose the talent issue, which is always important, is difficult now because government budgets will inevitably be hit, by the downturn, and this, I suppose, could potentially hit their ability to invest in education and in skills training that's needed at a critical time. We've had a couple questions come in from our audience, and we talked already about China, and as we have two representatives from Latin America, I guess the inevitable question is Latin America, or could it be the next China +1 destination? So, we always heard the model of diversifying, and you have to be in China, and then you should probably also have supply chains and production facilities and operations somewhere else. I'll ask Andreas first, because you can give the, I suppose, outsider take on this. And I guess the first question is the China +1 strategy still a thing? Is this still the way that companies are thinking? And if it is, can LATAM be the +1?
So I think some companies are thinking that way, but not as many companies are thinking that way as governments and investment promotion agencies would like. So this reshoring thing is something that comes up every single day, multiple times, whether I'm talking to an investment promotion agency from Latin America, South Asia, Western Europe, the United States. Everybody's big beacon of hope seems to be reshoring. And there will be reshoring, although I'm not sure if that's exactly the right term. So if we look at it specifically in the context of companies that are in China, companies that have been in China for a while have realized that costs have gone up there, have already been affected previously by the US-China trade conflict. So companies have already made moves in the last 3-4 years to move manufacturing specifically out of China to Southeast Asia. So there aren't that many companies, I don't have an exact number, but there aren't that many companies left in China that are still producing there because it's cheap and are producing there primarily for export. Because that's the real target market for reshoring. The companies that are in China, predominantly the foreign-owned companies, are producing for the Chinese market. The Chinese market has recovered very quickly. China's economy is one of the few that is actually growing right now. So why would a company leave China if it's selling into the Chinese market? There's absolutely no reason for that. So the reshoring will focus on companies that are still in China because somehow they didn't realize it was getting more expensive. Somehow they weren't affected by the US-China trade conflict. And now they need to think of how do we move somewhere else, or how do we diversify our footprint? There's also a group of companies, and I think this is a more interesting target group, who are going to be compelled by their clients to move out of China because their customers who they supply are saying to them, we'd like you to be somewhere else, either for political reasons, or we'd like you to be closer to us for supply chain resilience reasons. So that's a good target group. To your question, can Latin America be that place? Certainly for the US it can be. So Latin America, whether it's Central America or South America, presuming you have an operative free trade agreement with the US or with NAFTA, even better, can be a place for reshoring / nearshoring. Companies that have had things previously in China are moving them closer to home because they need to be closer to the US market. But again, I don't think we're going to be seeing a huge wave of this happening. We're going to see instances of this happening, and there's going to be a lot of competition for it, because in addition to Latin America, you have India that is really going after these types of opportunities aggressively. You've got other parts of the world, countries like Georgia in the Caucasus, or some countries in Central and Eastern Europe that have free trade agreements with the US, who are making exactly the same pitch to the same group of companies. One last word about that is, like all aspects of investment promotion, there's really something to be said about being targeted. You can't put all reshoring in one basket. If you're going after electronics companies, do you have the supply chain back home to allow those companies to actually operate? If you're going after pharmaceutical companies, do you have the skills? Do you have people who can work in a GMP environment to actually enable those companies to set up manufacturing plants in your location? So it's not as easy as saying companies will reshore. It really needs to be looked at sector by sector.
Thank you. And we've got just a couple minutes left, but I would like to hear quickly from Salvatore and Pedro. Salvatore, is this part of your strategy? I mean, are you actively targeting companies that might want to diversify away from China, or be this additional +1 for them?
It's a great question. I think we, at least I agree completely with Andreas. Actually, the opportunity there, of course, exists, but it seems be more approachable for the countries that are in the navel, because of the cost the cost arbitrage and the distance between the market that they are trying to address. So we have been seeing some relocation. We are very aware from some specific industries like life science and pharmaceuticals and medical dispositives, because for security reasons, you require to move from China in this case, to provide certain capacity to respond to what is coming the following years, because up to the time that we have the vaccine, this is gonna last for longer. And we see in that case a particular interest, but in others, what we see is, of course, the opportunity is there, but our competitive advantage and comparative advantage from the possible markets could be not necessarily the target that we are aiming to go for.
Thank you. And we've only got about a minute, but Pedro, in brief, are you making a play for this as well?
Yes and no. Our strategy is basically, our bet is on conscious business. We are trying to position ourselves as a country in which companies that want to do well to the environment, to the society, and to their bottom line can invest here. It's regardless of the origin of the company, it's really the type of companies that we're trying to attract. SDGs, the Sustainable Development Goals, are centerfold in our strategies, and we know there's a niche, there's a percentage of businesses, of companies worldwide that have that also as a priority, right? And we think this is not gonna stop or change. Therefore, our bet, it's really on conscious business. 3Ps business: people, profit, and planet. And for companies that want to have that as a priority, is that we will try to offer them a solution.
Thank you very much. I think the 3Ps there are a good place to end our discussion. Thank you, gentlemen, very much for sharing your insights with us.
Yeah, thank you very much, Pedro, Salvatore, y Andreas, for your expert view. Thank you very much. And thank you, Courtney, for your good questions. Thank you very much. Y gracias a todos vosotros, asistentes, por haber estado aquí hoy. Con ellos acabamos las sesiones, los paneles específicos de zonas económicas aquí en el canal Economic Zones. Pero VNew continúa. Ahora, después de la publicidad, bueno, pues conectaremos con la estación de Francia para una charla inspiracional con Luca Lazzarini. De nuevo, gracias por estar ahí, gracias a Servi Habitat que lo ha hecho posible y nos vemos mañana.